The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Thanks very much for tuning in, everyone. Ken Shreve with you. Welcome to another edition of Breakout Investing on TFNN. And a quick thank you to everyone who showed up to my webinar last night at TFNN.com. Good crowd. Appreciate the support, and hope you found it helpful. Just a reminder, my show that you're listening to right now, Breakout Investing, airs every Tuesday and Thursday on TFNN from 3 to 4 Eastern. Let's see. Phone number to use if you want to give me a call, 877-927-6648. You can get my show as a podcast on iTunes, and you can listen to all TFNN programming on the go with your smartphone. Just plug those earbuds in and type in tfnn.mobi in your smartphone browser, and you can get the stream that way as well. Be sure to check out Tiger TV right on the homepage of TFNN.com. You can listen to the show live, and you can look at charts right along with me as I'm going over them on the show. I do a lot of that each show that I do Tuesday and Thursday, so be sure to check out Tiger TV. Show is live on Channel 1 and archived on Channel 13, and you can also use your smartphone to watch Tiger TV as well, so be sure to check that out. All right, let's take a look at the major averages here with about 50 minutes left to go in Thursday's session. Not a great day for the market. Not a great day at all for the market. A lot of selling pressure. Start by taking a look at the S&P 500. Go ahead and update the chart here, and we'll see that the S&P 500 right now is down a little over 12 points, 0.9% to 1388, almost, well, let's call it 1390. You can see the S&P 500's 10-day, 20-day, 50-day moving average all converging here. It looks like pretty strong support here at the 1384, 1385. So the S&P 500 only about 3 points above support. I mean, let's hope this jobs report tomorrow has a decent number. I think the if we see a number of 150,000 or better, we should be okay. Anything below that is probably going to be problematic. What I know right now is that we're seeing signs of institutional selling in this market. Not major signs of institutional selling, but I mentioned on my webinar last night that we had a higher volume decline in the S&P 500 earlier this week on Monday. That higher volume decline happened 3 days after the S&P 500 followed through last week. I believe it was April 25th with its 1.4% gain. So anytime you see a higher volume decline in an index very soon after a follow-through day, it's a yellow flag. Okay, it means that the rally may not have staying power. Right now, volume on the New York Stock Exchange is tracking a little bit higher than what we saw yesterday. So now you're looking at potentially 3 higher volume declines for the S&P 500 since Monday. We did have a higher volume decline yesterday for the bogey, but the thing is that it closed all the way up near its session high. So it was a very modest percentage decline, but I suppose you could call that a higher volume decline as well. But right now, it looks like we could see 3 higher volume declines in the past 4 trading sessions, and that's potentially problematic. No reason to be on offense here. Be careful if you have profits in stocks. Keep them on a tight leash here because, again, we have that jobs report tomorrow. The way the market is trading, it is not expecting a good number. I think that's the message that we can get from the major averages here. All right, let's take a look at the NASDAQ composite here. NASDAQ composite underperforming by quite a bit today. It's down almost 41 points, 1.3% to 3,019. The NASDAQ, unfortunately, is now below its 50-day moving average at 3,029. It's about 10 points below its 50-day moving average. So we'll see what that means. It's not a good sign. Volume right now on the NASDAQ tracking very close to what we saw yesterday. So it's not clear that we're going to see a higher volume decline on the NASDAQ composite today, but just bad overall action in the market today. No two ways about it. Let's check in on the Dow as well. see what the Dow is doing. Selling pressure here as well. The Dow is down 83 points, 0.6% to 13,185. Now, it is still holding above support. I think meaningful support for the Dow at this time is right around that 13,040 area. That's its 20-day moving average. Its 50-day moving average is a little bit higher, actually, at 13,060. So let's call 13,040 a support level for the Dow. Taking a look at gold, down 1.2% to $1,634.80 a barrel. Let's check in on the GLD here. See that this is weak today as well. The GLD taking a hit here. It is down $1.78, 1.1% to 158.81. Crude oil down 2.6% to 102.54 a barrel. At last check, the U.S. dollar index was right around 79.25. I'll get you a quote on that in just a minute, but last right around 79.25. Dollar index is trying to get going here, and let me just pull up a chart here of the U.S. dollar index, and this is going to show yesterday's. No, that's not it. Bear with me here. Let's see. Dollar index. All right. Okay. It's USD. That's the U.S. dollar index, and you can see it's still below support here. This is yesterday's close at 79.13. Again, it was right around 79.24, 79.25, something like that. So a little bit higher today. Now, what I did is I did save a chart in here. Let me pull up the save chart I have for the U.S. dollar index, and here it is. And really, the story right now is what I've drawn is a descending trend line connecting the recent highs of the U.S. dollar index. To me, a new uptrend is not going to start in earnest here for the U.S. dollar until it breaks out over this descending trend line. Okay, you can see I connected the highs here. So you're really looking, just under 80 bucks. The dollar index is going to have to make a meaningful move, basically go over 80. For me to believe that a new uptrend could be for real here. And of course, if the dollar index starts rallying, that's going to present a pretty significant headwind for the stock market. So we'll keep an eye on the U.S. dollar index. It is getting interesting here. It's up, could be up for four days in a row now, but still stuck underneath that descending trend line. So not clear it's quite ready to turn upward yet. Interesting report from IDC earlier today on tablet shipments. Wanted to touch on that. Then we'll take a look at Apple. But IDC is a research company. They said worldwide tablet shipments totaled 17.4 million units in the first quarter. That's up 120%. From the first quarter of 2011. Apple, obviously the big leader here, shipped 11.8 million iPads in the quarter. They increased their market share to 68% of the tablet market from 55% in the fourth quarter. Samsung, now in the number 2 position, number 2 market share with its Galaxy tablet computer. Amazon's Kindle Fire having a little trouble here, now in third place. Saw its market share drop to just over 4% from 17% in the fourth quarter. So while we're talking these tablets, let's take a look at Apple. Apple, we've been talking about the heavy volume selling in Apple for quite some time. It is a stock that's quite vulnerable here. It's also having problems at its 50-day moving average. Remember, big earnings last week. The stock gapped up, finished near its low for the session, but still a strong performance. You can see all the higher volume declines here. This is what professional selling looks like in a stock. No two ways about it. And you can see it's been trying to rally back, but I mean, just sellers are completely in control here. Apple looks like it's ready to base, and frankly, lower prices look like they're right around the corner for this stock. Taking a look at economic data, we had same-store sales kind of under the radar. Not much talk about the same-store sales earlier today, but just under half of the retailers tracked by Thomson Reuters beat expectations, while just over half missed. So the numbers were not that great. When it comes to April same-store sales, some of the bright spots Let's take a look at Limited Brands here, LTD. Of course, they have Victoria. It's actually the Limited. They operate Victoria's Secret, Bath and Body Works. Good day for Limited Brands today. Stock is outperforming, up 2.2% to 51.53. 2.2% to 51.53. Same-store sales at Limited Brands came in at 6% in April. That was better than the estimate for 4%. And let's also check in on Nordstrom here. Very little in the way of good news when it comes to same-store sales. Nordstrom numbers were good there. They beat estimates 7.1% versus 5.8% after hitting an intraday high of 57.75. Nordstrom is near its session low now. It has reversed as selling pressure really starts to pick up in the market here. Nordstrom now down 32 cents, a little more than 0.5% to 56.88. Some of the weak spots in same-store sales, Macy's, 1.2% versus estimate of 1.9%. Target missed by quite a bit. Target, same-store sales of 1.1% versus 2.8%. Let's take a look at Target here. And Target has definitely turned into a laggard, a stock that's consolidating. You had a higher volume decline yesterday, even though the stock finished up near its session high. A lot of sellers in the stock today. Another little burst of institutional selling here. Target underperforming pretty badly here, down 2.5% to 56.55. Costco also under a lot of selling pressure here. This is another stock that I do not think is on sale here. Very bearish day for Costco, trading right at its session low, now down close to 3% to 84.07. At some point, Costco is going to find a bottom. At some point, new institutional money is going to come into this stock, but it is in the process of consolidating here and looks extremely vulnerable here. I don't think the stock is buyable here by any stretch of the imagination. So news not great from the retailers today. The irony is that weekly jobless claims earlier today were pretty darn good, and I think the market's reaction today is very telling. I mean, this is things. I always try to look at the market from a glass half full perspective. During my webinar yesterday, I was talking about the number of stocks that were really, have been acting right. Not really much in the way of breakdowns. Market leaders holding up pretty decent. And until I started to see material weakness in the leaders, I was not going to get decidedly bearish. But, very disappointing performance by the market today. And the jobless claims reading, down 27,000 to 365,000. That was much better than expected. Really stemmed 3 straight weeks of disappointing claims data. Of course, tomorrow, non-farm payrolls. I've seen estimates anywhere from 160 to 170. Unemployment rate at 8.2%. But, hey, let's hope we get a good number. Shaky action in the major averages this week. Doesn't bode well for a good number tomorrow, but who knows? We'll stay positive and hope we get a good number. All right, folks, we'll be right back. About 4 minutes. Breakout Investing on TFNN. We'll be right back.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Stocks trying to come off their lows here. About 35 minutes left to go in Thursday's session. The Dow now down about 56 points to 13,212. NASDAQ still under some pressure, underperforming here, down 31.5 points, call it 1% to 3,028, still holding above the 3,000 level. S&P 500 down 9.5 points, 0.7% to 1392. Mentioned at the top of the show that volume on the New York Stock Exchange set to come in a little bit higher than what we saw on Wednesday. So higher volume decline for the S&P 500 on Monday, higher volume decline on Wednesday, higher volume decline on Thursday. Gotta pay attention to that, especially in light of the S&P 500's follow-through day last week. So market looks like it's on the ropes here. Time to be playing defense, in my opinion. I own some stocks in my model portfolio. Still, don't have a whole lot of exposure to the market. Have a lot of small positions, just seeing what's working. But again, I did a webinar last night at TFNN.com that's going to be archived. Could be up on the site right now, I think no later than tomorrow, so be sure to check that out. And if you want to get a trial to my weekly newsletter, Ultimate Growth Stocks, where I update every Tuesday, I send out buy alerts, sell alerts, market updates in between. You can do that right on the homepage of TFNN.com. Just click on the newsletter tab, and then on investment newsletters, or you can just go to KenShreve.com, which takes you straight to my TFNN page, where you can click on the blue icon. You can listen to my radio show live. You can also click the green banner and sign up for a trial that way as well. All right, let's take a look at some earnings reports today. No shortage of good earnings reports in this market. I want to start by taking a look at Zillow, a monster gainer today. Zillow is a recent new issue, an IPO that's done pretty darn well. Zillow came public last year in May at $45 a share. Actually, that's not true. Zillow, looking at the wrong one here. All right, Zillow came public in July at $20 a share. Came public last July, $20 a share. Stock's having a huge day today, up $5.17, about 14% to $41.27. Just a good classic example of a technical breakout here. Company basically operates a real estate information marketplace via Zillow.com. Also has a suite of mobile real estate applications. It made 6 cents a share, reversing a year-ago loss. Sales, triple digits, up 103% to $22.8 million. Zillow is a small company, but very bright growth prospects. So there's kind of a new product, new service going on here. Company turned its first annual profit in 2011. Annual earnings growth is really expected to ramp up this year and next. Very real growth story going on at Zillow. Small cap name, good solid breakout today over a swing point of 39.48. Let's go just check on a weekly chart of Zillow. That's going to be all the way down at the bottom here. And you'll see the weekly chart for Zillow. I point out the swing point of 39.48, and frankly, this one still looks like it's in range to me. I've just been very careful about buying stocks in this market environment. Basically, as soon as I saw that higher volume decline in the S&P 500 on Monday, that was a yellow flag to me, saying this follow-through day that we saw last week may not have staying power. Still too early to give up on the rally completely, but it's certainly not a reason to be aggressive right now. Buying technical breakouts and targeting aggressive growth stocks. But a great day for Zillow, worth noting. Here's a stock that I mentioned on my webinar yesterday, if you didn't get a chance to listen, but another powerful breakout in a company called Web.com Group. Web.com, ticker WWWW. This is a very interesting company. Last year, they closed on their acquisition for a network solutions. Web.com Group is basically a website publishing company, domain registrar, just basically helps small and medium-sized business with their internet needs. Small company, market cap of about $775 million, but a good solid breakout yesterday, over $15.55. That's a swing point right here, and some good follow-through day for the stock today as well, up another 5% today to $16.19. And let's go ahead and take a look at the weekly chart for Web.com Group. And again, you'll see a nice big cup with handle, breakout over 1555. So strong move for Web.com Group here as well. In my opinion, has the potential to be an emerging leader, just like Zillow.com. So watching these two names closely. All right, folks, heading into our second break. We'll be back in about 4 minutes. Stick with us. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've heard Tom O'Brien on the air and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you. Thanks very much for tuning in as usual. 25 minutes left to go in Thursday's session, and we see that the Dow is down about 54 points to 13,214. NASDAQ still down 1% to 3,028, and the S&P 500 down 9 points to 1393. So market trying to hang in there, but not a great day so far. Mentioned earlier in the show, oil prices under quite a bit of pressure today. Oil now at 102.54 a barrel, down 2.6%. On the session, a lot of oil and gas producers came out with earnings either late yesterday, earlier today. Here's a look at Pioneer Natural Resources. This used to be a holding in my Ultimate Growth Stocks model portfolio. Decided to cut the loose today after some pretty bearish price action. When you're investing in growth stocks, I mentioned again on my webinar last night, you're not going to bat 100%. You're going to buy some growth stocks that are going to work and others aren't. And when you're wrong, you want to keep your losses manageable, keep your losses small, and when you're right, you really want to maximize those profits. That's the whole point and goal of investing in growth names. Now, the numbers at Pioneer Natural Resources, this is an oil and gas producer based in Texas, and the numbers were just absolutely fabulous. Pioneer reported earnings of $1.23 a share. That was up 95% from a year ago. Sales growth was the big story here. They did $882.8 million in sales in the first quarter, up 238% from a year ago. The sales almost beat expectations by $100 million. Okay, so what happens to the stock? Hits a high of 117.63, up 3 to 4% earlier in the session. Then selling starts to hit the broad market, and now it has reversed. It is now down 1.6% to 110.86. I decided to cut losses loose here for the simple reason that this is just not how a stock is supposed to act. It's abnormal price action. There's very heavy volume in the stock today. There are big sellers in the stock today. With earnings as good as they were, a lot of investors are going to say, I don't care. This company is still going to grow earnings nicely this year and next. The numbers were outstanding. First quarter numbers were outstanding. I tend to pay more attention to technicals in a situation like this. I know that this is not usual price action. If this was a good earnings report and there was new money coming into the stock, we would have seen this stock make meaningful headway over its last swing point of 113.51, and for that matter, its recent high before that of 119. And looked like it had a chance of doing it earlier in the session. It did not. The stock has fallen on its face. I don't care to be involved with it anymore, and that's fine. That's fine. I'm just kind of following a system here. I know it's unusual, abnormal price action today. Best to move on. And if I want to own another oil and gas producer down the line, I've plenty of choose from. And who knows? It may be PXD again. A couple of other fast-growing oil and gas producers. Continental Resources under a lot of pressure today as well. You can see shares of Continental really getting hit hard, down close to $8, 8.7% to 82.46. Looks like a legitimate breakdown in this stock today. Very, very heavy volume selling pressure. Good growth prospects here as well. A lot of these E&P oil and gas producers, exploration production firms show excellent growth, but Continental Resources under a lot of pressure today. And let's also take a look at Concho Resources, also out with earnings. This stock getting obliterated as well, down $5.34, a little more than 5% to 99.89. So not a good day at all for the E&P firms. We've got a call on the line. Let's go to Rick in Longwood. I think Longwood's in Colorado. Do I have that right, Rick?
Well, pretty close. Longwood's in Florida, about in the middle.
Oh, okay.
North of Orlando, a little ways. You're out
gotcha.
west. You're out west, right, Ken?
Yes, I am. I'm originally a New England guy, but I'm a Southern California transplant now. So I'm in.
I spent all of my high school time and junior high in the best place that it ever could be, and that was Orange County, close to Huntington Beach and Garden Grove. Oh man, I had the best growing up period I felt I could have.
Oh man, that's nice area down there.
Oh man, yeah. I got in SSO a few days back here, and of course I'm down a little bit, and I got my stop in. And what I did like about SSO, that he had a nice higher volume up. I think when I bought in.
I think this was on Tuesday. It rose in above average volume. It's been under some mild selling pressure over the past couple of days. Yeah, I mean this is so you're currently long SSO.
That's correct.
Okay, this is the ProShares Ultra S&P 500 exchange traded fund. Obviously, gives you twice the performance of the S&P 500. It's not a short fund; it's a long fund. The issue right now, Rick, I know you're a smart guy. You use stops. Obviously, the market's going to move. I suspect hard one way or another based on what that jobs report says tomorrow. I don't think we're going to see a quiet session of trading tomorrow. A lot of anticipation. My concern about the S&P 500, which you've probably heard me in recent days, when we saw that follow-through day last week on April 25th, it rose 1.4%, followed through on the 11th day of its rally attempt. It was bullish. Was it a powerful follow-through day? No, it wasn't a powerful follow-through day at all, but it was a signal to get long and see how it goes. Problem is, on Monday, as you know, Monday we had a higher volume decline in the S&P 500. It rallied Tuesday. And then Wednesday and Thursday, looks like there's a little more volume to the downside here. So to me, the S&P 500 looks like it's vulnerable here. That said, if we see 150,000 or better job print tomorrow, I think that's going to be good for the market. So at this point, just stick to your stop. Yep. And, you always avoid, small losses can be overcome. Big losses are the ones that can be, pretty
to that.
Pretty problematic.
Thank you, Ken. I'm a big fan of StockCharts.com, and I called you before about them, and you've helped me. There's one other item. I noticed earlier in the show you were bringing up $USD, as in U.S. dollar.
Right.
Okay, when I bring that up on mine, I get end of day.
Yeah, it doesn't, for some reason, I haven't checked with the people at StockCharts.com about that, but when you get a quote for the U.S. dollar index at StockCharts.com, they don't have that current day as of trading. It's just an end of day from the prior session's close.
Right. I thought when I saw your chart, I was watching you on TV just now, earlier, it looked like you did not have end of day. You had update, 20-minute delayed.
Well, let me pull it up right now. I don't think that's the EOD.
It is EOD? Okay.
It is EOD. I put it up with a descending trend line. Remember, I don't know if you heard in the beginning of the show, just talking about that U.S. dollar index. I mean, if it does break out with conviction over 80, I think that's going to be problematic, but it still hasn't happened yet. But that's end of day for me as well.
Okay. Well, thanks, Ken, for all your help, and I'll hang in there, keep my stop tight, and away we go.
Okay. And I'll remember where Longwood, Florida is from now on.
Yeah, hey, with the heat down here, I'd just as soon be in Longwood, Colorado.
All right, Rick, thanks for the call. Always enjoy it. Take care. Bye. All right, Rick from Longwood, Florida. Currently long the S&P 500, but he uses stops. So that's, listen, we get a good jobs number tomorrow. You could see a nice pop for the S&P 500. The funny thing is, I don't think anybody has any idea what that number's gonna be. All you can do is kind of look at, what is the market's message this week, and I would say right now, it's more bearish than bullish, but it doesn't always work out the way you think it's going to. So, all right. So before Rick called, we were talking about just weakness in these oil and gas producers. A lot of fast-growing names under pressure today: Pioneer Natural Resources, Continental Resources, Concho Resources. Here's a bright spot in earnings: Whole Foods Market, WFM, monster move. For this stock today, up 7.7% to $90.81. What you have with Whole Foods Market, we'll switch over to the weekly chart here. We'll see that Whole Foods Market is just another classic example of a base breakout here. Had a good flat base forming. You can see Whole Foods Market, basing, consolidating here. Finally breaks out earlier this year, and then right where I drew this blue horizontal line, just started to move sideways, started to base. This is just a classic flat base structure. Also happened to coincide right where its 10-week moving average is, but nice breakout over $86 a share for Whole Foods Market today. Currently trading around $90.88, but big numbers from that company. Earnings up 25% to 64 cents a share. Sales up 14% to $2.67 billion. CEO of the company called it the best quarter in the company's history. Did say that they're probably not going to be able to maintain, or what did he say? Something like don't expect repeat from performances like this quarter after quarter. He kind of quelled expectations, but there's no doubt that Whole Foods Market, despite a high multiple, I think it's selling around 38 times trailing, 36 times. Forward earnings, so a high multiple stock, but a company that executes like Whole Foods does quarter after quarter, you tend to see high multiples in stocks like this, and so I would say the Whole Foods is probably deserving of that multiple. I want to take a look at Value Click. This is a name that I've talked about recently. I did say, though, that I would not be interested in this stock until it broke out over $21.50 a share. So a stock that looked good technically, but, oh, man, is this thing getting hammered today. Value Click, provider of online marketing services to businesses. Stock is down $4.75 today. That's good for a 22% decline to $16.85. Good lesson here, folks. You know, a stock setting up for a potential breakout, it is risky buying in anticipation of a breakout, especially with earnings so close. So let's take a look at the weekly chart for Value Click, and you know what you'll see here. And again, one that I've talked about recently, you had a nice breakout right here, and then just a nice little consolidation, bounces off its 10-week moving average, really looks like it's going to break out over 2150 with conviction, and then the earnings report comes out and clearly was not up to what investors were looking for. So Value Click, very, very tough day for the stock, and it is unequivocally a broken stock at this point. Tough day for Visa at last check. Shares of Visa really getting hit hard today, down $5.83, almost 5% to $116.36. Visa, very clean balance sheet, not really too many problems, or hard to find anything wrong with Visa's balance sheet in terms of recent earnings and sales growth. Earnings this time around up 30% from a year ago to $1.60 a share. Sales up 15% year over year to nearly $2.6 billion. Issue here is a Department of Justice investigation. You know, when you come out with earnings and you have the words Department of Justice, DOJ, in there, that's typically not going to be good. DOJ is investigating Visa for potential antitrust violation regarding PIN, debit, and merchant fees. So we'll see how that plays out. Of course, shares of MasterCard falling in sympathy here. Shares of MasterCard down not as much, 2.2% to 441.34. So two big leaders, Visa and MasterCard, under quite a bit of pressure today. Of course, we'd be remiss without talking about another disaster du jour, Green Mountain Coffee Roasters. Boy, I can't help but remember when I owned Green Mountain in 2011 for the model portfolio. I went back and looked at the history of the newsletter, and I saw that I got out of Green Mountain at $79 a share back in June 2011, and never went back into the stock. And I'm glad I didn't. Green Mountain getting hammered today, down 47% in one day, down $23.35 to $26.17. Earnings up 33% from a year ago, 64 cents a share. Sales up 37% to $885 million. Sales of its Keurig Brewers single cup coffee packs are slowing. There's no doubt about that. But the conference call was very weird. I mean, the CEO just could not articulate where the company was. Said that the company's struggling to predict demand for its products. It cut its full year outlook. CEO kept talking about a lot of moving parts that are hard to understand, hard to get a feel for. I mean, as a CEO, that's really a tough deal. I mean, how is the market supposed to respond, when the CEO is on a conference call and can't really articulate what growth prospects look like for the company? So shares of Green Mountain, stick a fork in it, down 47% today to 26.17. A lot of other bright spots in earnings. Going to take a look at a couple of other growth names on my watch list. If this market does rally tomorrow, which is possible, can't rule it out. A lot of names I'm looking at pretty closely here. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization creation capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
What you think about, you bring about. What you focus on grows. If you're committed to becoming an extraordinary trader and investor, then make mastery your outcome. Yes, my best student, Steve Rhodes, became my best teacher. But even more important is what he's taught me, and the time is now for you to take advantage of his knowledge.
Thanks, Tom. I've learned that it's not what we do once in a while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online master trader course that'll teach you how to buy and sell the D point. This one pattern alone, with the single best entry and exit techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and it'll teach you to become a master. All the details are on the homepage at TFNN.com. Sign up today because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Wow! Go get him, folks.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, as we head into the close, put the finishing touches on Thursday's show here. Take a look and see what the markets are up to. And, so Dow is down 68 points, 13,200. NASDAQ near its session low, now down 37 points, 1.2% to 3,022. S&P 500 down just over 11 points to 1390. 1390 for the S&P 500. Another good earnings story today. Let's take a look at Teradata. Teradata is about data warehousing, data analytics. Teradata is about big data. That's a fast-growing area of tech right now. Nice move for that stock today. Stock is up 6.7% to 77.02. 77.02 for Teradata. So move over, take a look at a weekly chart. I like to look at weekly charts and daily charts. can see Teradata's technical breakout here in February, and what does it do? It just kind of comes, starts moving sideways right at its 10-week moving average, finds support. When a stock breaks out and finds support at its 10-week moving average, it can give you an opportunity, if you don't own the stock, to maybe take a small position. You don't want to take a full-size position on support at the 10-week moving average. Much better to do that or be more aggressive with position size when a stock is breaking out of a base like Teradata did in February. But good action in the stock today. Big volume stock, clearly under accumulation. So nice day for Teradata. And another name I was watching here, Valiant Pharmaceuticals. Very disappointing day for Valiant. I mean, this is just wild what this stock is doing. I mean, I don't know how a stock can, trade an intraday high of 59.94 and then a low of 49.76. So a 10-point swing here. Hit a high of 59.94. Now it's trading at 51.14. I mean, a stock that really, up until this point, had not been showing any sell signals whatsoever. It was holding above support, tight trading for the most part, and then boom. I mean, its technical structure just gets whacked today. But VRX, company that makes drugs that treat central nervous system disorders, pain, cardiovascular. They did report earnings. Let me see if I can get any numbers on VRX. I didn't write them down in my notes here, but yeah, it was another really strong quarter of growth. Earnings up 84% from a year ago. Sales growth accelerated from the fourth quarter. Sales up 52% to $856.1 million. So I haven't really did a lot of digging into why the technical breakdown today, but a stock that, again, under accumulation, had a lot going for it, headed into earnings. The numbers on the surface don't look too bad to me, but stock just getting killed today in heavy volume. All right, folks, coming up after the close, going to be very interested to see what LinkedIn has to say. Kind of a wild day of trading for this stock. Let's take a look at shares of LinkedIn after hitting an intraday low of 105.67. It is up near its session high now up 2.9% to 109.49 ahead of its earnings report after the close. LinkedIn is one of these IPOs that is profitable. LinkedIn came public back in May at $45 a share, now trading around 109.49. Another IPO that been profitable since 2010. Annual earnings expected to be up 80% this year, 75% in 2013. Quarterly profit this time around seen rising 50% to 9 cents a share, with sales up 90% to $178.4 million. LinkedIn, an online professional network that is looking pretty good here ahead of earnings. Also going to be looking for earnings from CF Industries after the close. Let's check in on CF Industries real quick. We'll see that shares of CF Industries are down 1.6% ahead of the results to 196.84. All right, folks, thanks very much for tuning in. Coming up next, the Tom O'Brien Show on TFNN. We'll talk to you later. Thanks for listening.